Hello and a warm welcome. You've joined us on Market Fatafat right here on ET Now. I'm Aditya Agarwala. With me is Ankita Saxena, and turning out to be a good day for the Indian markets. In fact, we are near that highest point of the day. Nifty is still up nearly 115 points as we speak to trade near that 24,850 mark. Nifty Bank is also performing in tandem, trading near that 54,332 odd mark. Auto stocks continue to trade high. They are in the fast lane today. M&M is up 4%, the biggest gainer on the Nifty 50 index. Nifty Auto Index is up a solid 3.5% on the back of that GST boost and the consequent price cut announcement that came in from several auto companies over the weekend. We have Tata Motors, that one is up 4%. Eicher Motors is also up nearly 3.5% in trade today. On the losing side, though, we have Trent. That one has shed nearly 2%. Trent is also the biggest loser on the Nifty 50 index as we speak. We have SBI Life down 1.5%. Nestle and Asian Paints are also some of the other losers on the Nifty 50 index. So, Ankita, let's get started with all the stocks that are buzzing in trade.
Well, yes, absolutely. Let's get on board a technical analyst, Aditya Agarwala, Head of Research and Investments, Invest for Edu, joining us. And on the research, we have Kanishka who's joining us. Hi, good afternoon to both of you. Thank you so much for joining us. Let's get going with all the stocks that are in focus then. First stock that is buzzing in trade is BHEL. That was up in a way 1.8% in the morning after the state-owned engineering firm signed an exclusive decade-long memorandum of understanding MOU with Singapore-based Horizon Fuel Cell Technologies to develop a hydrogen fuel cell-based rolling stock for the domestic market. Now, the 10-year exclusivity clause covers business sharing and joint development for the hydrogen fuel cell technology. On the back of this new development, BHEL is trading with gains of more than 2.5%.
Okay, so that's the fundamental view, but technically, Aditya, good afternoon, and you've also picked up this stock for us. Tell us, what do charts indicate?
Good afternoon, Ashisha. Thanks for having me. Oh, clearly, it's looking very interesting at this juncture on the verge of a breakup from a downward sloping channel. A trade above 219, 220 will trigger a fresh breakout in the stock and can propel the stock much higher to levels of 230, 35 in the near term. On the downside, 215, 216 is a very good support area. So I would suggest buy at current levels, add on a breakout above 220, look for a target of 230, 35 with the stop loss at 215 on the downside. Volumes are also encouraging, and RSI and MACD both are suggesting bullishness in the coming trading session. So overall, it's a good and healthy looking chart setup. One should clearly look at BHEL from a trading perspective for a target of 230, 35 on the upside.
Okay, so that's BHEL for you. The stock over the last 1 month has declined nearly 2.5%. The stock continues to remain in focus. But meanwhile, let's also talk about Angel One. In fact, JM Financial has come out with an initiating coverage report on Angel One with a buy rating and a target price of 2,700. The stock currently trades at 2,330. In fact, JM Financial says that it is an agile business with strong promoter, and that continues to provide comfort as far as JM Financial, as far as the Angel One is concerned. In fact, they say that strong growth across parameters with client base growing at nearly 68% on a CAGR basis continues to provide support, and despite regulatory changes with concerns around retail losses in derivatives segment, Angel One has stabilized FY25 profit after tax at FY24 level. In fact, they expect 15% decline in PAT for FY26, but it is likely to recover from the next financial year, that is FY27 onwards. So they are maintaining their positive stance. It's an initiating coverage report. So they've come up with a report with a buy rating. 2,700 is their target price. Angel One holding up with gains of nearly 2% as we speak on the back of this report.
All right, Angel One in focus on the back of that report, trading up for more than 1.5%. But Vedanta is another share that is seeing some traction today. Kanishka, take us through what's the news flow on Vedanta.
That's right. So Vedanta shares are in focus today after reports suggested that the company has likely emerged as the winning bidder for debt-laden Jaiprakash Associates. Now, sources have told ET Now that Vedanta's bid of around 12,500 crore rupees NPV came in higher than Adani Group's in the recent challenger round. Jaiprakash Associates, which defaulted on loans worth over 55,000 crore rupees, has assets across real estate, cement, power, hotels and roads as well. That said, the deal is not final yet. The Committee of Creditors could take around 2 months to approve the resolution plan, with the NCLT clearance expected in about 8 to 10 months. In fact, it is also being suggested that payouts will be staggered, with the first tranche of about 4,000 crore rupees post the NCLT approval and the rest over a 5 to 6 year period. Brokerages remain cautious on this development. Nuvama has questioned the rationale behind the move, saying Vedanta should focus on deleveraging instead of unrelated businesses. Other than that, Citi has also added that uncertainty around monetization of assets, including a large Delhi NCR land parcel, that could weigh in on the stock. So that's the reason why the stock is in focus, currently trading about 2% lower.
Okay, so that's Vedanta for you, but let's also put the spotlight on CDSL then. Aditya, you've picked up this stock for us. Tell us, where do you see the stock headed on the charts?
After a good consolidation, my sense the stock is now poised for an up move again. It did take support at key support levels of around 1400 on the downside. I also see positive divergences on a daily time frame chart. So overall, it tells me that the minor profit taking that we witnessed in the stock is over now, and it's headed higher from these levels. So one should clearly look at adding this stock from the trading and from an investment time horizon, and can see levels of 1800 from a medium-term time horizon and 1700 from a near-term time horizon. On the downside, 1500, 1450 are very strong support areas. Plus, both the indicators that I closely monitor, which is RSI and MACD, are suggesting a bullishness in the stock. So overall, I think with the stock for somewhere around 1500 or slightly below 1500, one should look at adding the stock in the portfolio for a target of 1700 and 1800 on the upside.
Right, moving on then from CDSL to the next counter that is in focus, and that is NTPC Green. NTPC Green is likely to be in focus because it is the company has signed an MOU with the VO Chidambaranagar Port Authority to establish a green hydrogen fueling station and deploy a hydrogen-powered trucks for port operations. Now, the agreement with the Tuticorin-based Port Authority aims to promote green energy technologies, particularly green hydrogen mobility. On the back of that, NTPC Green Energy is in focus today. It has given up all those morning gains, is currently trading towards the lowest point of the day with cuts of 0.7%.
Okay, so that's NTPC Green Energy for you. But Aditya Birla Capital, Aditya, where do you see the stock headed from the current levels?
It's a very interesting looking chart setup, Shesha, because stock has been constantly making higher highs, higher lows, and it's on the verge of a breakup from a trendline resistance as we speak. The moment it breaks out of that hurdle of 290, 291 on the upside, stock is poised to test levels of 306 to about 310 on the upside. So my sense is in the near term, maybe in a day or two, you will see a fresh breakout in the stock from that hurdle of 291. And once it does so, it will test levels of 306, 310 as I mentioned. So one should look at adding the stock even at current levels and fresh addition above 291 with the stop loss just around 285 on the downside, and look for a target of 306, 310 on the upside. Overall, it's a very heavy looking chart setup and likely to continue its up move in the coming session this way.
So that's Aditya Birla Capital for you. The stock has risen nearly 6% over the last 1 month. But let's also put the spotlight on a whole host of pharma counters that are in focus on the back of latest IPM data. In fact, Nomura has come out with a report and they say that IPM grew by about 8.7% on a year-on-year basis in the month of August. Growth was led by price increases across segments and new product contribution across therapies. In fact, the report also says that Sun Pharma and Torrent Pharma grew the highest at about 14%, 14% for each of these companies, and except for Cipla and Lupin, which grew in line with the total aggregate growth in the IPM, which is at about 8.7% on a year-on-year basis. As far as other companies are concerned, Glenmark, Lupin as Zydus recorded a decline of about 1.5 to 2.5% for each of these companies. And slower growth was seen for top brands as well within the pharmaceutical space. So on the back of this latest IPM data, a whole host of pharma sector stocks continue to remain in focus today.
All right, so the pharma stocks are in focus on the back of that news flow, but let's move on to the one from the auto pack. Hero Motor is what you've picked out for us, Kanishka. Tell us what's the news flow and why is Hero Motor in focus?
That's right. So Hero Motor is in focus because the company has named a new CEO, that is Harshvardhan Chitale. Now he has been now the board has appointed him as a CEO effective January 5th of 2026. He replaces Vikram Kasbekar, who was acting as a serving as an acting CEO since May this year after Niranjan Gupta stepped down on April 30th. Now he will continue to be on the board as executive director and chief technology officer. Meanwhile, Mr. Chitali is an IIT Delhi alumnus and brings over 3 decades of global leadership across India, the US and Europe as well. Apart from that, investors are going to watch out how this new leadership shapes up Hero's strategy, especially in EVs and premium motorcycles. Other than that, Hero MotoCorp has also begun sales of Zoom 160 in India. That's keeping the stock in focus today, up nearly 2.5% as we speak.
That's Hero MotoCorp for you, up 2.5% as we speak. But Lemon Tree Hotel, it is currently at about 178 and 2% higher already for this counter today so far. Aditya, 200 on the card for this counter?
Oh, absolutely. I think it will take some time, but the stock will test levels of 200. It's a very strong looking chart setup. Ashesha, as you would have seen, has been constantly making higher rise, higher low. And interesting is all that up move is backed by healthy volumes. Whenever there's a consolidation in the stock, volumes are really shallow. And on the up moves, you see heavy volumes in the stock. So that clearly tells that there is strong buying momentum in the stock. And this momentum is likely to propel the stock much higher to levels of, as you mentioned, 200 and 210 is the next target that I'm playing with. On the downside, 165 is a very strong support area. And plus, if I take a look at the MACD and RSI, both are suggesting strong bullish momentum going for the stock. So overall, my sense is this entire space is looking interesting. And within the space of hospitality, Lemon Tree is something which tops the list. So my sense is buy at current levels and look for a target of 200 to 210 in the near term.
All right, moving on to the next counter that is in focus, and that is Samvardhana Motherson, that is in focus in the back of a note by Citi that has come out with a sell target of 75 rupees. Now, as far as the Vision 2030 targets are concerned, the revenue goal of 108 billion US dollars by FY30, versus 25 billion US dollars in FY25. So that's something that the company had given. Now, the ROCE target of 40% is also something that the company had given. And the transformation in the DEMA, the design, engineering, and manufacturing assembly, that is likely to augur well for the company. But the expansion into new industries, geographies, and products is likely to be through acquisitions and the leverage acquired firms' tech and the OEM ties to raise content per vehicle and develop complex products. So that's what the company is saying. And also, they're likely to move towards full vehicle assembly by 2030, and they're diversifying into the non-auto segment, especially the aerospace and the consumer electronics. Now, the ambitious targets are, but execution has fallen short of what they have been talking about. And the diversification is positive, but the global demand weakness is a major concern for SAMIL. On the back of that, they are maintaining a sell target, but nonetheless, Motherson is trading up with gains of 4% right now.
Okay, so that's Samvardhana Motherson for you. The stock continues to remain in focus today, but let's also put the spotlight on a whole host of other stocks that continue to remain in focus. Samvardhana Motherson, that itself is a stock that Aditya has picked up for us. Tell us on the charts, where do you see the stock headed?
I have a divergent view, Ashesha, and looks like a strong going for the stock. Look at the volumes in trade today. Healthy one, quite extremely healthy, and rather on the back of this 4% up move that you're witnessing. My sense is stock can test levels of 105, 110 from here on if one holds on to it for at least a few weeks. With an immediate support at 96 on the downside. So overall, it looks like the stock is gearing up for a breakout to levels of 110. I would do a buyer in Samvardhana Motherson at current levels. Look for a stop loss somewhere around 96 on the downside and a target of 105, 110. And if you also plot moving averages and RSI, both are suggesting bullishness going for the stock.
All right. SAMIL in the charts, and plus there is another note by JP Morgan that is maintaining an overweight rating and has given a target price of 105 rupees. So a couple of brokerage notes actually that is powering the stock, and of course on the charts also Aditya seems to be bullish on the counter. But let's move on to ET now. Is learning that TVS Motor Company will roll out the entire cost benefit of its GST rate cuts to end customers. That's the word that's coming in from Gaurav Gupta, who's the president of the company's two-wheeler business, who spoke to Jude Saneth along the sidelines of TVS Apache's 20-year celebrations. Now, Gaurav also said that the company was prepping for its best Diwali ever, even as it continues to navigate the rare earth crisis. Here's a slice of that conversation.
We are seeing the GST benefits being reduced from 28 to 18%. As we speak, the guidelines, based on the guidelines, our teams are working out the details. Right. But of course, we will be honoring in full spirit, as well as making sure the consumers have a very, very fantastic, great festive season.
Right. Great timing as well. The festive season, of course, like you just mentioned, is well and truly upon us. What's the outlook like as far as sales are concerned? Massive impetus by way of the GST rationalization announcement. Many goods have now seen a downward movement in terms of the GST slab. Gaurav, what are you expecting from the great Indian festive season this year in terms of sales?
Well, we were already looking forward to a great festival season. If I were to talk before what we just heard a few days ago from the GST Council as well as from the Finance Minister, we were seeing and we have seen a great monsoon this year, 104% plus over the long-term average. We've seen great level of waters in the reservoirs. The macroeconomic fundamentals remain strong in the country. The repo rates have been encouraging. On top of that, what we are seeing now is this bonanza. So, it is going to become good to great, and we're looking forward to probably the best Diwali ever and building it up from there.
Before all this good news came, I think one big concern that both the company and multiple players in the automobile space were discussing was this whole rare earth metal business in terms of how supply chains were getting strained on account of the Chinese problem, with TVS even going on record saying that alternatives will have to be looked at. With China now easing curbs on exports to India with regard to rare earth metals, does the plan to look for alternatives continue as far as two-wheelers are concerned?
Well, I would say that we bring back the focus on Apache today. But still, to answer you on the question, I think we are still not out of the woods as of now. Everyone and we also are looking at developing alternative ways, technologies to be able to address it. It is still a day-to-day, a week-to-week approach in terms of how we are managing it. And we are very confident that as per the, the support that we're getting from all the stakeholders, the government as well, and the guidelines, we should be out of the woods hopefully very soon.
That's the word coming in from the management of TVS Motors. But before we wind down on this edition of the show, let's take a look at all the top headlines. Brent snaps 3-day decline even as OPEC Plus decides to hike output by 137,000 barrels per day in the month of October. The modest hike comes in amid weak demand prospects and likely surplus. Goldman Sachs maintains its outlook for cheaper oil and expects Brent to average at $64 per barrel in the fourth quarter of this calendar year.
Gold hovers near fresh highs following a weak U.S. job report, boosting expectations of a Fed rate cut. Traders now see a 90% chance of 25 bips cut at the upcoming Fed meeting. All eyes now on PPI and CPI data later this week.
Copper continues to trade steady as weak jobs data boosts rate cut expectations. Lower rates normally support investment demand for assets such as copper, which bear no yield. Other industrial metals like aluminium and zinc are also gaining marginally in trade today.
Palm oil swings between gains and losses as markets assessed a smaller than expected supply rise in Malaysia. This against concerns that strong demand from key buyers may soon cool off.
And the European Union is exploring new sanctions on about half a dozen Russian banks and energy companies, as per reports. The move comes in as a part of its latest round of measures to pressure Putin to end its war against Ukraine.
All right, with that, it's a wrap on this edition of Market Fatafat. I will take a leave. Thank you so much for tuning in.